Now, here we are with the chapter employment income. Now, remember when you're studying the chapter employment income, it is better to study it along with the next chapter, taxable and exempt benefits. Now, CR questions sometimes feature entirely from this area, employment income. So, we should be very good with this area, employment income. Now, one theory type of question which you can expect is what are the factors? What are the factors that help us decide whether a person is employed or self-employed? Employed or self-employed. So if you want to know the answer to this, okay, there are some factors which you need to read through. You can go through your BPP workbook, page number 51. Page number 51, BPP workbook. You can actually go through the factors which show us whether the person is employed or self-employed. Just go through that. In case it comes as a theory question, those are some easy marks. It's very simple. Like they say, if the client is providing any necessary equipment for work, this is likely to include, it is likely to indicate employment. That means if you are getting any equipment from our boss, that means we are employed, we are not self-employed. So there are some conditions like that. Please take a look at that. Okay, then employment income is taxed on receipts basis. Yes. Then for non-directors, now for non-directors, what are the rule? For non-directors, what are the rule? Like how do we get to know the date? That is receipts basis. We need to know the date in which the earning, the amount is actually received, because when we get the date, we'll get to know in which tax we show it. Is it 1920 or 2021 or whatever it is? So the date, the earnings received date is important. For non-directors, is the earlier of received date, that is the amount when we the day when we receive it, or the day when when the amount is paid. Or let's say, let's keep it more simple, the day when the amount is paid. Yeah, it is actually the earlier of, we're going to see this, it's the earlier of 2 dates. Okay, when we receive it, the receipt of the data, that is whenever we receive it, earlier of this date, and when the employer becomes entitlement. So entitled to such a payment, entitled for such a payment. It's the earlier of these 2 dates. Now, the question, you will not have to assume which is entitled. They usually mention in the question itself what is the entitlement date. So for non-directors, you have to take a look at the earlier of both these dates and take that date and see in which tax year it comes, and then you know whether or not you have to show in the tax year in which the question is being asked. Then, in the case of directors, there are a total of 4 rules. 4 rules, yeah. Earlier of 4 dates gives you the receipt date for directors. What are the 4 dates? First is receipts, actual receipt, actual payment date. Second is the date when you get entitlement, entitled to such a payment. Third is when it is credited. Yes. Third is when it is credited. Okay. When it is credited to the company's account, credited to company's accounts, company's accounting records. Okay. Then fourth date is the date of determination. Determination date. Determination date. Now, determination date again has something like, if the date in the question, if the determination date is before the period of account, then that will be, then the end, the period end will be the determination date. If the date is after the period of account, then that date will be the determination date. Now, when I say this, if it's not clear to you, what I suggest is go back to your handouts, and there's an example which I have given you, which helps to understand how to find the determination date. So once you have these 4 dates, the earlier of these 4 dates will give the receipt date, and then you can see in which tax year it comes and whether or not you have to show in the tax year 2021. Okay. Now, when it comes to employment income, it includes your bonus, so salary, bonus, commission, all these things are included in your employment income. Okay. And what are the allowable deductions? Some allowable deductions that you can think of is contribution to occupational pension scheme. Now, the general rule is like this. Okay, what is the general rule? Let's take a look at what the general rule is. So when you're recording employment income, what kind of expenses will the taxman allow you to reduce from your employment income in your tax returns? Obviously, all the expenses which you can prove that was wholly necessarily, the expense you incurred was only for the employment purpose. In such a case, you can actually show the tax authorities that it is an allowable deduction. So what are the allowable deductions? Contributions to occupational pension scheme. Is it the employer or the employee's contribution we reduce? The employee's contribution. Then any fees to professional bodies, fees to or subscription, fees or subscription to professional bodies. Okay, that's another one. Then any traveling expense, okay. Then donations to, charity, that is payroll deduction scheme. That is, payroll deduction scheme. Payroll deduction scheme. Okay, that's another one. Then capital allowance on plant and machinery provided by the employee. Capital allowance on plant and machinery provided by the employee. These are the various allowable deductions which we can do. These are the various allowable deductions which we can reduce. So if it is not still clear to you, go to your handouts and take a look at the format, of a format which I have given you with regard to employment income. What are the allowable deductions? Now, travel expense, when it comes to travel expense, how do you know whether or not you can reduce something as travel expense? It's now one main rule is that if the traveling was done exclusively for the purpose of employment, it is an allowable deduction. But some certain rules to look into. Relief is not available for ordinary commuting. Okay, relief is not available for ordinary commuting. Okay, ordinary commuting and private travel. What is ordinary commuting? Ordinary commuting means the travel you do daily from your home to your workplace, home to your permanent workplace. Now, relief is available for travel to and from temporary workplace. If you're traveling to temporary workplace, the travel expense relief is deductible. What is temporary workplace? A workplace in which we spend actually 24 months or less than. We have a contract of 24 months or less than that. That is a temporary workplace. Okay, so that's what I written at 24 months. So in these cases, the travel expenses are actually deductible. Travel expenses are very much deductible for you. Okay, now these are the travel expenses. Now let's talk about something called the AMAP. Now, what exactly is AMAP? Your company or your employer gives you some amount as your travel expense. You're using your own car for, so AMAP applies when you're using your own car, okay, for business purpose, your own car for business purpose. When you're using your own car for business purpose, okay, when you're using your own car for business purpose, there is something called AMAP. That is, your employer will give you some amount as your fuel allowance, your mileage allowance. Now, that is kind of like an income, right? So how much of that income is tax free? That is called the AMAP amount. So what you do there is you have to first find out how much the employer pays you. First find out how much the employer pays you. Then from there you reduce the AMAP. AMAP means for how many of miles you are given. For the first 10,000 miles, you will give a rate of 45p, 45 pence, that is 0.45. You will multiply into 0.45. Everything above 20,000, it will be 25p. So you find an amount like that, and whatever comes here is your taxable benefit or your allowable deduction. If it is a positive answer, it is a benefit. If it is a negative answer, it is a deduction. All right. So that is a case with regards to traveling expense and AMAP. If employee pays more than AMAP, so I meant if the employer pays more than AMAP, it is a taxable benefit. Okay, taxable benefit. If the employer pays less than AMAP, it is a allowable deduction. It is actually an allowable deduction. Okay, it is an allowable deduction. All right. So here we have all the concepts of the employment income chapter.